Hi guys, Evan FX here. I've been, I believe that you guys would have gone through the the basics parts. There's a lot more professional stuff there too, so I believe you guys would have gone through all of that. What I want to do now is I want to open up something that I just learned, and it's going to be for majorly for the students that are coming in from now. And I just want it to be about 10 minutes lecture, 10 minutes lecture. All right, so summarizing everything that you've learned in the former videos, I'm going to be putting everything together here so that you can grab it easily and you can use it to trade. I call it PPRC. I don't call it PPRC. I learned it and it's called PPRC rather. So but it's mixed with what I do, so it's not really PPRC. It's PPRC plus my individual knowledge, so you guys can get to familiarize with it. So let me quickly explain that when it comes to trading is majorly decision making. It's majorly about decision making. And when it comes to decision making, you need to know exactly what to do and why you do them. All right. I would explain first of all that when you open your charts, when you open your charts, you need to, number one, know what the market is doing. And then number two, you're supposed to know when to join, and then number three, you're supposed to know when to leave. And I always say that you are living in profit or in loss, because trading is a business, it's an investment, and you need to know when, at a point when you are supposed to leave, even though you are in loss, that at that point this loss is enough and I think I can deal with this. Because as an investor, you need to see trading as a business. You need to really see trading as a business. As an investor, you need to have a basic knowledge of investing, which is that in investment, because this is risk income. That's what trading gives you. It gives you risk income. There are other things that would not give you risk income, so I would advise, probably I will give those advices later at the end, or let me give them now, that I would advise that just 10% of your net worth should be in trading. Have other streams of income, at least for you to start. As you continue to grow here, you get bigger now, but as far as now is concerned, please, let's just 10% be in trading. Back to what I'm saying. So I'm saying that you need to know what the market is doing. You need to know when to leave and when to join, and when to leave, either in profit or in loss. So as an investor, you should know that, I'm investing, if I'm investing $1,000 per trade, I am allowed, I want to let go of $500 and make $1,000, which means that one loss, one win is going to cover for two losses. That's smart investing, please. So you have to be very careful about all of this. Then back to what I was saying. So how to know what the market is doing? I've always said that knowing what the market is doing is based, knowing what the market is doing is what we call market structure. Market structure helps you define what exactly the market is doing. For example, I always explain that if you buy, and you would have heard it in the former course, that if you at a particular junction, probably I'm in Akure in Nigeria, Ondo State in Nigeria, and in Akure here, probably you want to get to, there is a university in Akure here called Federal University of Technology, Akure, and that university, at the gate of the university, you have 3 gates: West Gate, North Gate, South Gate. But let me pick North Gate now. If you say at North Gate you want to see between 8 and 9 a.m. 30 cars passed, for example, and you want to know how many cars were blue, how many cars were red, how many cars were white, how many cars were whatever, you can check. You don't need to be at that place between 8 and 9. You can check a graph representing what happened between 8 and 9 a.m. at that place, and it would explain to you perfectly what happened at that place. You will know the exact cars that came there and did not come there. Same thing with market structure, same thing with the chart. If these charts do not begin to speak to you, you will be having a hard time analyzing what is going on here. And I think that's one of the big issues that people face. They face issues of this chart speaking to them. So this chart speaks English. There is a physical representation. This is a representation of something happening physically presently, and you need to understand that. So that's what market structure helps you to understand. What is the physical representation of that's representation of what is happening physically at the moment. Now, when it comes to how to join, I believe that candlestick patterns help you to answer that. Candlestick patterns help you to understand when to join the market, and I will explain the different kind of candlestick patterns that you can make use of, that are powerful. But let me quickly finish this. When it comes to living, you are working with your zones. Living a trade works based on zones, and let me say zones and risk management plan. Very, very, very important. So these are the things that I actually work with. Now, let me say that you will not pick this hook, line and sinker just like that. I'm trying to say that you will need to learn how to blend these things. You will need to learn how to blend these things when you get to the real market. Let me say where to join. I can say candlesticks and time frames, because I think for a long time people have not been taught that time frames are not just for you to view better or something. Time frames are also technical analysis tools, please, and you need to know how to make use of time frames, because a structure can be clear on a 4 hours time frame, can be clear on a 30 minutes time frame. You need to be careful in knowing how to play with juggle time frames. Let me use it like that. So you need to know how to juggle time frames. I have to state that. Yeah, so that's by the way, these are the things that we're going to go through. We're going to go through market structure again. I'm going to explain it again. We're going to go through candlestick patterns again. We're going to go through time, not necessarily again. I'm going to just show you the important ones. So I've explained fully in those other courses, but presently I'm just going to show you the important ones that you need to know. Time frames, I'll go through them, and then zones and risk management plan, I will go through them, and then that will be the end of this. You guys should be able to combine these tools and be able to make money from it. But if you do it well, you guys will really be able to make money from trading with your risk management plan and your psychology that must not be affected. I need to also state this thing about psychology, because many people have issues with this psychology thing. People take amazing trades and use crazy lot sizes that obviously is going to affect their psychology, and then when they get into deep loss, they don't know what to do. I want to pick trade and be able to go and rest. I want to take trade and be able to go and sleep. I know how much I'm losing if it goes to loss. I know how much I'm making if it goes to profit. I'm fine and I'm done. So please, there's no point trading and having heart problems. Let's do it the right way. All right, so it's still even FX. It's still even FX. Yeah. Cheers and God bless.